Hi, I'm Esther Olaosun from ARM Investment Managers. I'll be taking you through the key highlights of the financial markets for November 2024. Let's jump in and explore the trends that shape the market. In the macroeconomic space, we saw Nigeria's GDP grow by 3.46% year-on-year in Q3 2024. And this showed steady improvement compared to the 3.19% that was recorded in Q2 2024 and 2.54% in Q3 2023. This growth was largely driven by the service sector, which saw an impressive growth of 5.19% year-on-year. Meanwhile, the agriculture sector expanded by 1.14% year-on-year, while the industry sector grew by 2.18% year-on-year. Overall, these sectors work together to push the economy forward. According to the latest inflation report from the National Bureau of Statistics, headline inflation in Nigeria saw a significant rise in October 2024, marking the second consecutive month of increase. Headline inflation climbed by 1.18% to 33.88% year-on-year, up from 32.7% year-on-year in September 2024. This was mainly driven by an increase in both food and core inflation. Food inflation jumped by 1.38% to 39.16% year-on-year, while core inflation rose by 0.94% to 28.37% year-on-year. On a month-on-month basis, headline inflation increased to 2.2% month-on-month in October, compared to the 2.52% month-on-month in September 2024. This was also driven by a rise in food inflation and a slight increase in core inflation. Meanwhile, the Monetary Policy Committee had its final meeting for the year in November. At the meeting, members of the committee voted to raise interest rates by 0.25% to 27.5%, from the previous 27.25%. Other policy parameters were left unchanged, signaling the bank's continued focus on managing inflation and economic stability. Moving on to the equities market. In November 2024, the NGX All-Share Index edged down slightly, closing at 30.4% year-to-date, compared to the 30.6% year-to-date in October. The top gainers were Unicel, which had an increase of 277%, John Holt's, which increased by 197%, and Sunu Assurance, which grew by 86% in the months. Other notable performers included Tantalizers, which did 79%, WAPCO, which did 50.6%, Corn Oil, which did 45.8%, and Prestige, which did 35.6% in the month. On the other hand, some tickers faced steep declines. Multiverse had a decline of 33%, Orlando was down by 27.6%, ABBDS was down by minus 26.2%, Etana decreased by 24.4%. We also saw RT record a negative 18%, and these were among the top laggards, weighing down the index. In other news, we see Holcim has agreed to sell its 83.81% stake in Lafarge Africa plc to Huaxin Cement Limited, a leading Chinese cement company, for $1 billion. This move aligns with Holcim's strategy to optimize its portfolio and concentrate on high-growth regions. The deal, expected to close in 2025 pending regulatory approvals, follows a similar divestment in 2022 when Holcim sold its businesses to Uganda and Tanzania to focus on core markets. The acquisition could intensify competition in Nigerian and broader African cement markets, potentially impacting local players and reshaping the industry dynamics. In the fixed income market, in November, the total supply of treasury bills exceeded market expectation, with the DMO allotting more than initially offered. At the first auction, 626 billion naira was allotted against an offer of 513 billion naira, with stock rates across the 91-day and 182-day bills increasing by 1%, while the 364-day bill surged by 2.35% to 23%. The second auction followed a similar trend, with 693 billion naira sold against an offer of 610 billion naira. The 364-day bill stock rate rose by another 0.5% to 23.5%, while rates for shorter tenors remained unchanged. In the bond primary market, the DMO offered 120 billion naira, but ended up selling a hefty 346 billion naira, driven by strong interest in the 2031 maturity. Stop rates edged up, reaching 21% for the 2029 bond and 22% for the 2031 bond. Meanwhile, in the secondary market, selling pressure pushed yields higher, peaking at 26.2%, except for the medium-term instruments, where pockets of buying interest brought yields down to 25.4%. The Nigerian equity market has shown impressive resilience in 2024, buoyed by solid corporate performance in key sectors like banking, oil and gas, and agriculture. However, challenges remain as investors navigate the effects of high inflation, elevated interest rates, and fiscal uncertainties. On the brighter side, increased participation from domestic institutional investors and a more stable naira are providing crucial supports. For savvy investors, focus should remain on strong stocks in banking, oil and gas, and the industrial goods sectors. The fixed income market is expected to stay under pressure in the near term as the CBN continues aggressive liquidity tightening measures through bond and T-bills issuances. Yields on government securities are likely to remain elevated, with the long end of the curve attracting stronger demand due to higher risk-adjusted returns. Inflationary pressures and high fiscal borrowing needs will keep yields attractive, though volatility is expected to persist. Thank you for your attention and engagement. As we celebrate the joys of Christmas, we want you to know that our commitment to your financial success remains steadfast. If you have any questions or need further information, please don't hesitate to contact your relationship managers or our customer care representatives. As you navigate these markets, remember, staying informed and focused on long-term value is a timeless winning strategy. And during this festive season, let's also cherish the moments that truly matter. From all of us at ARM, we remain invested in your tomorrow, wishing you a Merry Christmas and a prosperous New Year.